Hi, this is Tom from Chesapeake Tax and Accounting. I've been getting a lot of calls the past few weeks about the SBA loan program that's part of the Stimulus Act called CARE. So I wanted to take some time, walk you through some highlights of what we know as of right now, and we will continue to keep you posted as we get some information. So what I'd like to do is go through and kind of give you the agenda for what I'd like to talk about today. The Paycheck Protection Program is basically keeping people on the payroll during these troubled times, and talk about the loan forgiveness, talk about what we need to do afterward, and then entertain any questions that people would have offline, of course. So without any further ado, let's get started on the Payroll Protection Plan. The Act defines the period being from February 15th through the June 30th. That's the period of time for which the government will reimburse you or basically lend you money to keep people employed. This is available to small businesses with 500 employees or less, and it's also available to sole proprietors. The sole proprietors will have additional documentation requirements that they'll have to produce, and it's also available to franchisees who normally would not be eligible for a small business loan. And again, probably backing up a little bit, this is all going to be administered through the Small Business Administration under Section 7 of the Small Business Administration Act. So the maximum loan that you are eligible for is going to be basically 2.5 times your payroll for a period of time, and it's kind of a look-back period, a period of time that is comparable. So they're going to go back from March 1st, 2019 to June 30, 2019. Going to take the payroll, and you're going to take the average of those months, come up with a monthly average, and then it's going to be 2.5 times that amount will be the maximum amount of loan that you're eligible for. In addition to that would be any other loans that you have outstanding with SBA that have been done 1/1/20 to 2/15/20. This is who would be eligible for the loan and kind of what the maximum amount of the loan is. The first question is going to be, well, what is payroll? So payroll in the Act is defined as salary, wages, commissions, or other similar compensation. It's going to include vacation, sick, family leave, medical leave. It's going to include allowance for dismissal or separation, which I found interesting given that they're trying to keep people on the payroll. But sometimes that happens for other reasons. So I guess there's a provision in there for that. We'll also cover group health care benefits and the payment of retirement benefits. Let's circle back to this group health care benefits for a second, though. The group health care benefits work for a company that has several employees on staff. There are some small businesses, some subchapter S corporations, where the insurance is a personal plan and the personal plan is getting reimbursed through the S corporation. Those would not qualify because they're not group health plans. So as you're looking at this and you're calculating your costs, make sure that you're kind of dealing with the correct terms. So to me, this group health could be a gotcha for some of the small businesses out there. What payroll costs don't include would be compensation greater than $100,000. And again, you take it over the comparable period. So you'd annualize it, prorate it, whatever you want to call it. It's not going to include any taxes imposed under the FUTA taxes, railroad retirement, which isn't going to pertain to many small businesses, or withholding taxes, because withholding taxes, by definition, are already included in part of the gross compensation. It also will not include any benefits that are already provided elsewhere. If you're going to get a credit under the tax law for certain coronavirus payments, if somebody's sick and you're getting a credit for their wages anyway, you don't get to double dip. And then this is limited to people who are physically located in the continental USA. And again, that's not going to really affect most of the people that we deal with in the Baltimore metropolitan area. So there are specific uses that you can use these funds for. So you get this SBA loan, they give you X number of dollars, 2.5 times payroll, and you can use that money for certain expenditures. You can use it for payroll, which is pretty much how we divided it before. Interest on mortgages. You can't use it for the mortgage principal payment, but you can use it for the interest on mortgages. And so this is an interesting point. So the question is, you have a mortgage payment you have to make. Do you write two separate checks? Do you write a check for the principal from your account and you write another check and only use the proceeds for the interest portion? So again, I would look at that. You can use it for rent under a lease agreement and utilities that you have, your electric, telephone, etc. Interest on any other debt obligation that was incurred before the period. So if you have an installment note that you're paying or a note on a leased vehicle or something like that, that would all qualify. Again, it's the interest on that obligation, not the principal. So you can't use the proceeds to pay principal payments. You can only use it to pay the interest payments. And let's circle back around here to the rent separately. Many small businesses have owner-occupied buildings, and if you do not have a written lease agreement where you agree that your small business is paying you X number of dollars a month, $3,000, whatever the number is for rent, that's not going to qualify because it's not pursuant to a written agreement that exists on or before the coverage period. The good news on this loan is it's non-recourse. They're trying to expedite the process. The banks are still kind of working through all this, trying to figure out how do we do this and how do we get it so that we can get the money out to people quickly. And they're trying to figure all this out. But according to the Act, there will be no personal guarantees, which is normal on an SBA loan. There will be no collateral required, which is normal on an SBA loan. And there are kind of no adverse ramifications except for if you're using the funds for anything other than allowable use. And I think I kind of identified some of the gotchas up here in the allowable use of funds as we previously talked about. So we can talk about later on next steps on some of the recommendations we have, but let's keep moving here. So one of the things that they are going to do is they are going to require you to certify that the loan is necessary due to economic conditions, what the use of the funds is for, that you have no other application pending for a small business loan, or you have no other loans that you basically obtain. So you haven't already gotten one loan and you're going for another loan. So those are the certifications they want from you. The terms of the loan, maximum maturity is 10 years. I've seen one agreement where the bank wants it paid back in 2 years. Interest rate is not to exceed 4%. The interest rate on one of the banks that I've seen is 0.5%. The balance will be guaranteed by the Small Business Administration, and there can be a deferment of up to 6 months for the payment of interest, principal, and fees under the terms of this agreement. These would be the ways that you would prove that you've been affected by the COVID virus. One is, has your supply chain been disrupted? Somebody in the construction industry, you may be a home builder or something, building a house, and you've ordered trusses, and now you can't get those trusses because they're coming out of Pennsylvania, and Pennsylvania isn't shipping anything or everything's closed down. You may have some staffing challenges where you have people and they've been affected by the COVID virus with a family member, whatever, and they're not there, and you have staffing constraints, and it's causing you problems in delivery. Again, that's a covered issue. The other, which is the primary one that I see, is going to be a decrease in gross receipts. With people not working, people aren't spending money, and a lot of small businesses are suffering from lack of business. So these would be the criteria for which you would qualify for the loan to begin with. The next area is the terms of the loan. The loan is a SBA loan. It includes covered rent, and again, these are obligations that are enforced before February 15th of 2020, and it defines what an eligible recipient is. And they talk about the loan can be forgiven, and the expenses for which you can use obviously are the same ones which you qualify to use it for. That's payroll costs, the payment of interest on mortgage, on covered mortgage obligations, the payment of rent for covered rent. And again, if it's not covered rent, then it doesn't qualify, and that kind of gets back to self-rentals. You got to make sure that there's a written agreement and any covered utilities. So the expected forgiveness is basically based upon using the money for the same funds for which you took the loan out, which kind of makes sense, doesn't it? Now, there are limitations. So the forgiveness can't exceed the principal amount of the financing. So if you borrow $100,000, you can't get more than $100,000 forgiven, and that makes sense. It will be reduced based upon the number of employees that you have. And this is based upon, again, comparison to the base period. One of the base periods is the same time in 2019. The other is the average FTEs that you had from 1/1/20 to 2/15/20. So depending on what is a better comparison of reduction of the headcount, just had a phone call from a client that's in the construction industry, and they have an employee who is refusing to go into people's houses to do work. And so raises an interesting dilemma. What do you do? I mean, if you have 10 people and that person's not going to work, and so your headcount goes from 10 to 9, then the amount of your forgiveness is going to be 90% of whatever you borrow is going to be forgiven based upon the acts of that employee. So there's a lot of factors that are going to come in here that a lot of people haven't thought about, and I didn't think about that one until a phone call this morning. The reduction of wages, so we're comparing 2019 wages to 2020 wages, and you have employees that are based upon commissions. You have some people that make commissions, and let's say that based upon what I sell, I get a 25% commission. Well, with my sales being down, my commissions are going to be down. The interesting thing, I thought about it a little bit. So if my monthly payroll is X number of dollars back in the base period, I'm going to be able to borrow based on that base period. So again, let's say it's $10,000 to make the math easy. I can take 2.5 times that $10,000. I get $25,000. Well, if my people aren't making the commissions, I'm not necessarily going to have the same level of payroll. And so I may not need all that money that I'm eligible to borrow. And so that's something you have to look at. So it's not necessarily as bad as I thought it was at first. The other would be not only reduction of headcount, but also reduction of payroll. And again, this is where the reducing the payroll comes in. If that is reduced, you're not going to get all of that forgiven. But again, you may not spend it all, so you can give it back and you pay it back. It kind of makes sense. I think it's okay. And then to be eligible for forgiveness, it's not automatic. That's the key I want to do. You're submitting an application to a bank who has the right to approve or disapprove that application. So the first question is, okay, what if everything's legitimate and they deny it? What's your due process? Not sure we know what that is yet. The other thing is, if we jump down to the very bottom, no documentation, no forgiveness. So the banks are going to be looking at you to provide certain documentation. They're going to want payroll taxes, your quarterly 941s. They're going to want the quarterly state payrolls that you submit, unemployment returns, withholding documents. They're going to want documents of canceled checks for your utility bills, for your qualified rent, for the interest on the mortgage. And again, that's why I'm thinking probably separate checks for the interest and the principal. They're going to want a certification from you that the documents are correct, and you have to come up with the amount that you're requesting forgiveness. You borrow $100,000, you may only be entitled to $75,000 of forgiveness. You still would be on the hook for the $25,000. And again, no documentation, no forgiveness. So the next steps, okay, you got to look at it and you have to make some hard decisions. It's not on the slide, but the first one is there are some nice provisions later on that I haven't gotten to because we're talking about the paycheck protection part, but there are some enhancements in the unemployment. So do you lay off part of your staff, run with a smaller staff, and don't get the money, don't get the loan, and take advantage of the unemployment provision. So you got to kind of do a pro and con of both scenarios. So I'd look at reducing your staff size and seeing what happens with the reduced volume of business. What do you need to run that business at a reduced volume? The people who get laid off would not necessarily be adversely affected with the government subsidy of the unemployment, so it may work for the whole team. So the documents you want to do is you want to make sure that you first document everything that you are putting together to get the loan to come up with the amount. Some of the people I'm talking to are saying that the banks aren't asking for anything, documentation up front, they're just asking for a number. But I would have the documentation to support that number. If you're requested to pull it together, how'd you come up with $50,000? Here's the number. The other thing you want to do is keep track of documentation, knowing that if you want to get to forgiveness, you got to provide documentation for how you actually spent the money. So why not set up the process now to track it so that you don't have to go back and dig through and recreate it? You've set up a process. That could be as simple as setting up a separate checking account. I bank with Bank of America. They let me have a separate checking account, no extra charge. I can go into that separate checking account and run all the payments that I do through that separate account. And what will happen is that I've got all my expenses isolated now. I keep my receipts that come in because they're going to want receipts for the utility bills. I set up a separate file for everything that's a qualifying expense. So when it comes time, I've got my documentation and I can get my submit my application for waiver of the repayment. So the other thing is a lot of clients aren't getting copies of their canceled checks. One of the requirements in the Act was canceled checks supporting that amount or some proof of payment. If you're not getting canceled checks, one of the things that you could consider is a third-party application such as HubDoc. HubDoc actually, when you link your bank account to it, will download a copy of that check into HubDoc, and now you have it for your retention. So whether it's HubDoc or some other tool, you need to find a way of retaining this information. A lot of factors, a lot of different scenarios. There's a lot of different things to consider. Every single business I've talked to, their facts and circumstances are different. And so whether this is the best solution, scaling back, taking the unemployment, it's kind of, and the other factor is the things we don't know. And how long is this going to go on? How long, if I get this money, can I keep people on payroll? What are those issues? So those are the factors that we have. I do have a copy of a loan package from a lender. It looks like these loans are going to start being offered on April 3rd. And as I get information, I will continue to roll this out. If you have any questions, please call us at 410-592-2588. We'll be happy to help you as much as we can. Hope this was helpful and look forward to speaking with you and helping you through this crisis. Thank you so much.